Executive Summary. Achieved strong Q1 results with 25% growth in current cloud backlog to 21.9 billion euros and 27% cloud revenue growth, nearly reaching 6 billion euros. Total revenue rose 12% year-over-year to 9.6 billion euros, driven by a 30% increase in cloud ERP suite revenue. Operating margin improved to 30%, up 2.9 percentage points, with operating profit up 24% to 2.9 billion euros. Indirect channel order entry grew faster than direct, now nearly 30% of total order entry. Significant customer wins across industries and strong adoption of AI and data solutions. Financial highlights. Cloud revenue up 27% year-over-year, with Cloud ERP Suite revenue up 30%, now 87% of total cloud revenue growth. Software licenses revenue declined 33%. IFRS Cloud gross margin at 74.6%, non-IFRS at 75.2%. IFRS operating profit increased 17% to 2.7 billion euros. Non-IFRS operating profit up 24% to 2.9 billion euros. Free cash flow was 3.2 billion euros, impacted by a 408 million euro litigation settlement. IFRS EPS up 9% to €1.66. Non-IFRS EPS up 20% to €1.72. Outlook and guidance maintains full-year 2026 financial outlook, assuming near-term de-escalation in the Middle East. Expects slight deceleration in cloud backlog and cloud revenue growth in coming quarters. Reltio acquisition included to support guidance. Services revenue setback seen as one-off for 2026. Acceleration in total revenue growth expected in 2027, driven by backlog ramp. Segment performance cloud revenue growth, particularly strong in APJ and EMEA, solid in Americas. Outstanding performance in Brazil, France, Germany, India, South Korea, Switzerland, UK, and US. Indirect channel order entry outpaced direct, now nearly 30% of total. Key financial ratios and metrics: operating margin at 30%, up 2.9 percentage points year-over-year. IFRS effective tax rate 29.1%, non-IFRS 29.3%. Total expenses expected to grow at 80 to 90% of total revenue growth. Risk factors and uncertainties. Geopolitical tensions, especially in the Middle East, pose significant risks to supply chains and customer sentiment. Prolonged closure of the Strait of Hormuz could materially impact global supply chains and financial outlook. High uncertainty limits visibility on bookings and pipeline, especially for H2. Significant events and developments. Announced intent to acquire Reltio to enhance master data governance for AI agents. AI transformation is a gradual evolution, not disruptive like the prior cloud transition. Internal AI adoptions driving productivity gains across engineering, support, and go-to-market teams. Targeting 2 billion euros in efficiencies by end of 2028 through internal transformation. No plans to monetize customer data access. Focus on protecting IP and domain know-how. Capital allocation and financing free cash flow impacted by litigation settlement. M&A focused on tuck-in acquisitions in data and AI, not revenue-driven. Market and industry conditions. XAPIs outpaced global enterprise applications cloud market by 15 percentage points in 2025. Customers increasingly prioritize resilience and digital transformation amid macro uncertainty. AI and data solutions are central to customer decision-making and transformation initiatives.